Friends, this is Mrs. Shamin and you are watching my YouTube channel SJM Commerce Champ. In this video, we are going to learn about hire purchase system. We will be covering historical background, meaning parties to hire purchase system, terms used in hire purchase, two aspects of hire purchase, nature or features of hire purchase system, and the most important two questions that are difference between hire purchase and installment sale system and difference between hire purchase and lease finance. Why I said important? Because these are two questions which are commonly asked in exam. Let's start with the introduction or historical background. The origin of hire purchase system is traced back during industrial development in United Kingdom. Henry Murray, a piano maker, introduced the system of hire purchase in 1846 in United Kingdom. In India, this system started after World War II, and the founder members for introducing this hire purchase system in India were Commercial Credit Corporation Limited, Motor and General Finance Limited, Investment Supply Limited. Now we'll see what is this hire purchase system is actually. A hire purchase system is a system under which goods are let on hire and under which the hirer takes the asset with an intention to purchase it in accordance with the terms of agreement. So here you can see that one term I have used, that is hirer. The hirer is the person who takes the asset on hire, and he has taken this asset with an intention to purchase purchase the same in future. So it's a system under which goods are given by one person to other person, and the other person means the person who takes the goods or the asset on hire has the intention to buy the asset in future, but according with the terms of agreement. Now we'll see who are the two parties involved in hire purchase. As I mentioned, first party in the previous slide, that is hirer, that is buyer or debtor, the party which receives the asset, and the second party is obviously the seller or the creditor, the party who rents out the asset to the other party, that is the hirer. So these are the two parties involved, hirer and the creditor or the seller. These are the terms used in hire purchase. The first term is hire purchaser or hirer. A hire purchaser is a person who possesses the goods under purchase agreement for use with an option to either purchase it or return after use. Mostly, or I will say 99% chances are there, or 99% there is a possibility that the hirer is going to buy the asset, or he has the intention to buy the asset in future. So hire purchaser or the hirer is the person who takes the asset in his possession and he has the intention to buy the asset, but he has option also here that he can return the asset after use. Hire vendor or the seller or creditor, he is also a creditor. A hire vendor is a person who sells the goods under hire purchase agreement, who rents out the goods to the hire purchaser, who sells the goods to the hire purchaser. So the person who sells the goods is a hire vendor or seller. Cash price, it is the price of goods which is sold under contract of sale. Be careful students, here I am saying under contract of sale, not under hire purchase contract. If you are not entering into hire purchase contract and you are buying the goods under normal contract of sale, then what price you are going to pay, that price is called as cash price. Next concept is hire purchase price. It is the price at which goods are sold under hire purchase system. So when goods are sold under hire purchase system, it is called as hire purchase price, and when goods are sold under normal contract of sale, that time that price is called as cash price. Now talking about hire purchase price, it includes cash price of the goods plus interest. So definitely hire purchase price is going to be higher than the cash price. Cash price includes only the price of the goods, but higher price includes price of the goods as well as the interest. Now why interest is charged? Because the reason is the buyer is not going to pay the entire amount of the goods, entire price of the goods at present. Right now he will be paying the amount in installments. That's why the seller is going to charge some extra amount, and that extra amount is nothing but the interest. So interest is the difference between hire purchase price and cash price. The next concept is installment money. Already I have mentioned about it, that it is a part of higher purchase price paid by the higher purchaser, the higher buyer in periodical intervals. And then the next concept is down payment. See, like leasing. In leasing, 100% financing is done, but in hire purchase agreement, here 100% financing is not done, students. You have to make certain contribution from your side also, and that is nothing but the down payment. It's the initial payment made by the hire purchaser to the hire vendor at the time of entering into the purchase agreement. Suppose the asset value is 1 lakh rupees and at least 20% can be the down payment. Now it depends, again it depends on the agreement between the buyer and the seller about the down payment percentage. Sometimes it's 20%, sometimes it's 30% as well. So say suppose the price of the asset is 1 lakh rupees, so and down payment is 20%. So the higher buyer is going to pay 20,000 rupees to the hire vendor at the time of entering into the hire purchase agreement. And the next is hire charges. It is an amount. It is an amount which refers to the difference between hire purchase price and cash price. It is also referred to as interest. Students, I have already told you that in the previous slide. Here you can see cash price is the price without any interest, and hire purchase price is the price with interest. So hire purchase price is equal to cash price plus interest, and here hire charges are nothing but the difference between hire purchase price and cash price. So it is also called as interest. Then the next is termination of hire purchase agreement. The hirer can terminate the agreement at any time by giving 14 days notice to the owner. However, whatever the amount is already paid by the hirer is considered as hire charges. It means he is not going to get back any amount, any part of the amount that he has paid to the seller as installment. That is going to be considered as hire charges, interest. He is not going to get back anything from the seller, but he can terminate the hire purchase agreement at any time before the end of the agreement by giving 14 days notice. So in this way we have seen the terms used: hire purchaser, hire vendor, cash price, hire purchase price, installment money, down payment, hire charges, and termination of hire purchase agreement. Let's start with the next part, that is two aspects involved in the hire purchase system. There are two aspects. Which are those two aspects? The first one is bailment of goods and the second one is element of sale. Now the bailment of goods suggests that till the payment of last installment, the hire purchase buyer is going to take care of those goods. Though he is not the owner of the goods, still he is going to take care of the goods, those goods, as if those goods belong to him only. Okay, so he is having a responsibility of those goods. He is going to take care of those goods, and at the end of the agreement there is an element of sale if required, or I should say as per the wish, or as per the requirement of the buyer. If he likes the goods, definitely is going to buy those goods, or he can return those goods. That option is also available. So bailment of goods, this particular thing is involved in hire purchase because the buyer is not the owner, means the person who takes the goods on rent, on hire, is not the owner. That doesn't mean that he is going to spoil those goods or he is not going to take care of those goods. No, he is supposed to take care of those goods as if those goods, that asset belongs to him only. An element of sale is nothing but at the end of the agreement, the hirer, the buyer, the person who has taken those goods on the hire purchase system is going to become buyer of those goods. Then features of hire purchase system. Hire purchase system is completely based on agreement, and that agreement should be in writing. Now we'll see some details of the agreement. As I said, hire purchase agreement should be in writing and it should be signed by both the parties. Yes, that is the most important condition. Then what are the contents of this hire purchase agreement? Description of the goods, detailed description, what are the goods, the quantity, the quality, the size, everything is mentioned in the hire purchase agreement. Hire purchase price of the goods. Yes, here the hire purchase price along with the cash price and interest and all those things in detail, it is going to be mentioned. Date of commencement of agreement, when the agreement is going to commence, and the number of installment, maybe 12 installments, 24 installments, 36 installment, whatever it may be. So the number of installments is also going to be mentioned in hire purchase agreement. Then the amount of the installment, due date of the installment, these things all these things have to be mentioned in hire purchase agreement, so that future conflicts can be avoided. So this was about hire purchase agreement. Student, the next feature of hire purchase system is buyer takes possession of the goods at the time of entering into the contract. He just takes the possession of the goods. That doesn't mean that he becomes owner. No, he becomes owner, but when you can look at the point number 4, ownership transfers from the buyer to the seller on the payment of last installment. Till the time he is supposed to take care of the goods as if he is the owner, he is not. He is not. I should say, he should not do any harm to the goods. He should see that he is taking care of those goods, and it means, students, he will take the possession of the goods until the last installment. He is going to take care of the goods, and after the last installment he will become the owner. So that a particular thing should be kept in mind, that after taking the possession he is not going to become the owner, but he has to take care of the goods as if he is the owner. Third point talks about each installment includes higher charges. That means installment is equal to cash price plus interest, the portion of the cash price plus interest, and that interest is nothing but the higher charges. Definitely the higher seller is going to charge some extra amount. Why? Because he is not going to get the entire price of the goods, in one shot. He is going to get it in installments, so that's why he is going to charge some extra amount, and that is nothing but the interest, and also called as higher charges. Fifth point is that the purchaser has a right to terminate the agreement any time before the property passes. So when before the property passes means before the end of the contract, or I should say before the title of the goods pass from the seller to the buyer, from the hire vendor to the hire buyer. Before that he has a right to terminate the agreement. After that he can't do anything, because after that he has already become the buyer. Then the next thing that we will cover is advantages of hire purchase system. Expensive items such as machinery and plant can be acquired without huge financial investment. Yes, students, no need to make huge financial investment in one shot, because sometimes machineries, plant required for business are very expensive, and if you try to make investment in one shot at a time, then what happens, your amount gets blocked in that particular investment, and then nothing remains with you for working capital. That's why it's a good option that huge machineries and plant can be acquired. So no need to make huge investment here. Only 20 to 30% down payment is sufficient. Then interest charge and depreciation of the vehicle are taxed. Any vehicle, or I should say here asset, interest charge and depreciation of the asset is tax deductible. It means the hire buyer can show interest charge to him and the depreciation of that particular asset on the debit side of his profit and loss account. So that is tax deductible. The next is terms can be flexible and fixed repayments make for easy future budgeting. So both of them can decide, both of them in the sense the hire vendor and the hire buyer can sit and decide the terms and conditions. Those are flexible, that those terms and conditions depends on them. They have entered into agreement at any time. They can change those terms and conditions. They fix the repayment schedule and repayment amounts and all, the number of installments and all as per their future needs. Then the next is after full payment of hire purchase agreement, ownership of the goods is transferred to the hirer. This we already seen. Now disadvantages of hire purchase, we'll see. This is available only to the reputed buyers. Obviously the hire seller is in must be he must think that he should get reputed, or he should get a hire buyer who will not do any default in future in repayment schedule and all. That's why he will try to find out a buyer who is reputed in the market, who has good financial condition, or his financial credit rating is good in the market. Then this particular type of hire purchase system, this induces mindless, indiscriminate and liberal purchase, which may lead to bankruptcy. This again, I want to tell you that this depends on the particular person. Whether he is getting induced or not, that depends on that person. But generally, it is said that when finance is available easily, then you keep buying, you keep purchasing, you keep investing, and sometimes, not every time, sometimes this may lead to bankruptcy if you are not able to pay your loans, or if you are not able to pay your borrowings on time. Then buyer has to mortgage future income. Buyer has to mortgage his future income. He has to give the budgeted income statements and tell how much he's going to earn and all. So whatever his future income is there, he has to give the estimate of the same, and he is responsible. He is liable to take care of the installments and all by mortgaging his future income, by utilizing his income. The next is danger to the buyer, losing even the paid installment in event of default. Now, suppose buyer has committed a default and he's not able to pay the remaining installment. Then what happens? The agreement will be cancelled, and whatever he has paid, that is not going to he's not going to get it back. So this is a danger to the buyer. Higher prices thus making one more thing I will explain here in case of fifth point. Sometimes the higher buyer takes the goods on in hire purchase system, a particular asset or something, and after using it, if they come to know that it's not proper and all, definitely they can return it back. In that case also, student, he is not going to get back anything, any amount paid by him. So this is a danger to the buyer. Higher prices thus making purchase expensive. Higher prices are more than the cash price. That's why it is said that higher prices makes the purchase expensive. The last point is loss to the seller in the event of default by the buyer, which may result in seller having to repossess an article which may not fetch much market value. This last point is from the viewpoint of higher seller. Suppose default is committed by the buyer, then higher seller is required to repossess the article. He will go and take back the article that, or the asset that he has sold to the higher buyer. In that case, what will happen, that whatever installments paid by the higher buyer, he is not going to pay him back. But here, if he has not covered the maximum part of the cash price of his asset, then he will try to sell that asset. Now the problem is that asset has become second hand asset. He is not going to get much market value of that particular asset in market. That's why this is a loss to the seller. Then students will see the difference between hire purchase and leasing. Let's start with the first point. Okay, difference between leasing and hire purchase. Ownership of the asset. We'll talk about ownership of the asset. In case of lease, ownership lies with the lessor. The lessee has the right to use the equipment and does not have an option to purchase except finance lease. I have already made a separate video on difference between operating lease and finance lease. So if you are getting confused here, you can watch that video. Plus, I'll explain here in short that that option is not given in operating lease. Okay, that option of buying the asset at the end of the lease agreement is only available in finance lease. Why? Because it is for a very longer period, and the lessor recovers the entire amount invested in that asset. That's why at the end of the lease agreement, he gives option to the lessee to buy that asset, because he is not interested much in the asset, because he has already recovered the amount, plus he has recovered the profit as well. So ownership lies with the lessor in case of operating lease. Option is not given to the lessee to buy the asset, and in case of finance lease, the ownership will transfer at the end of the agreement. Option is given to the lessee, to buy the asset in case of finance lease. I hope the point is clear. Hire purchase. In case of hire purchase, the hire becomes the owner of the asset or equipment immediately after the last installment. Here students get confused. They think that immediately after signing the agreement. No, not after signing the agreement. After signing the agreement, he can become the possessor of the goods. He can take the goods, he can use the goods, but he cannot become owner. When he'll become owner? When he'll pay the last installment, and after paying the last installment of the entire hire purchase agreement, then he becomes the owner. I hope this point is clear. Then the next point is about duration. Lease is generally done for longer period, and bigger assets like land and property are leased under a lease agreement. This point is from the viewpoint of finance lease. If you want to elaborate this point, you can write that in case of finance lease, lease agreement is for longer duration, and in case of operating lease, lease agreement can be for shorter duration. Now, hire purchase. Hire purchase agreements are done mostly for shorter duration, and cheaper assets like a car, machinery, and small type of equipments are given under are sold under hire purchase system. So again, I'll repeat here: lease for longer period and hire purchase for shorter period. Tax impact. This is the important points. Please be careful when you are writing or when you are giving tax impact to the maintenance cost. In case of lease, what happens we'll see. In case of leasing, the lessor is allowed to claim depreciation and lessee is allowed to claim the rentals and maintenance cost against taxable income. So lessee is going to give effect to the maintenance cost and lease rentals and all, especially the lease rentals. He can show those lease rentals on the debit side of profit and loss account. That's why here it said that lease rentals and maintenance costs can have tax impact. Because of this, the tax amount can reduce of the lessee. Then in case of hire purchase, only the interest component of hire purchase installment are tax deductible for the hirer. So hirer is going to take only the interest component of the hire purchase and not the principal component. But in case of lease rental, that is not applicable. Interest and principal, both the component can be shown on the debit side of the profit and loss account of lessee. Then extent of finance. This we have already seen that lease finance is complete financing. Here, entire amount of the asset is financed by the lessor. But in case of hire purchase, the hire buyer is required to pay some particular percentage of the cash price, and that ranges from 20 to 25%. That's why lease finance is called as complete financing, and hire finance is called as partial finance. Repairs and maintenance. Lease repairs, in case of lease, repairs and maintenance of asset in finance lease is the responsibility of the lessee, but in operating lease is the responsibility of the lessor. So if it's a finance lease, the lessee is going to take care of the repairs and maintenance of the asset, and if it is operating lease, the lessor is the owner, and at the end of the term of the agreement also he is going to remain the owner. Option is not given to the lessee to buy the asset. That's why he will be responsible for the maintenance cost. Who? The lessor in case of operating lease. Then hire purchase. Responsibility lies with the hirer, that is the buyer. As I have already said that he is taking the possession after signing the agreement, and till the end of the last installment or till the end of the agreement, he is going to take care of those goods as if he is the buyer. He is the owner of those goods. So that's why whatever repairs and maintenance are there, that he is going to pay off. Then depreciation. Depreciation is claimed as an expense in the books of lessee in case of finance lease and lessor in case of operating lease. It's very simple that who is going to claim the depreciation. If it is a finance lease, then lessee is going to claim the depreciation, and if it is the operating lease, then lessor is going to claim the depreciation. The reason is in case of finance lease, mostly 99% chances are there that at the end of the agreement, the lessee is going to buy the asset, and in operating lease, that kind of option is not available. Finance lease is maybe for 30 years, 20 years, 50 years, sometimes 99 years. So it's obvious that lessee is going to claim the depreciation in case of finance lease. Hire purchase. The depreciation claim is allowed to the hirer in case of hire purchase. So maintenance costs, repairs, and depreciation. All these three costs he is going to claim in case of hire purchase. Who is going to claim? The hirer is going to claim. Then amount involved. These are some General points, so you can write these points maybe to increase the length of your answer, but the most important points were till point number 6. This is seventh and point number 7th and point number 8 is that lease under lease the amount is comparatively huge, and at a higher purchase the amount involved is comparatively smaller. In case of if we talk about the asset, generally aircraft, ship, machinery, plant, equipments, these assets, the big assets where the amount involved is huge are given on lease. And in case of hire purchase, generally automobiles, office equipment, generators, these are the assets where the amount involved is not so huge as compared to the leasing assets. These are the assets which are given on hire purchase and purchase on hire purchase system. Now students will see the difference between installment sale system and hire purchase. Nature of contract. Hire purchase system, it is an agreement of hiring the goods, and installment sale system is it is an agreement of sale. So this is the most important difference between two. When hire purchase agreement is entered, the hire buyer is not becoming buyer at that point of time. He is going to become the buyer of that particular goods at the end of the agreement after paying all the installments. That's why the agreement of hire purchase is not agreement of sale, it's an agreement of hiring the goods. And in case of installment sale system, once the agreement is signed, the buyer, the person who has entered into the agreement, becomes the buyer of the goods. So that's why it is called as agreement of sale. Ownership. The next point of difference between hire purchase and installment sale system is ownership. Ownership of goods is transferred after payment of final installment, and here in case of installment sale system, just signing the agreement, ownership transfers from the seller to the buyer. So this is again one of the most important difference. Many times objective type question is also asked on this particular ownership point. So please be careful that there is a big difference between hire purchase and installment sale system. In hire purchase, ownership transfers at the time after the payment of all installments, and in case of installment sale system, after signing the agreement, ownership transfer to the buyer. Right. The next point is right. Hire purchase system. The buyer cannot sell, destroy, or transfer the goods. Buyer is not, in case of hire purchase, the hire buyer is not, has not become the actual buyer of the goods. Till the end of the agreement, till the last payment, till the payment of last installment, he is just using the goods. He has not become owner. That's why he cannot have any right of selling the goods, destroying the goods, transferring the goods, or harming the goods. He cannot do anything with the goods. But in case of installment sale system, as the buyer has become owner after signing the agreement, he gets all the rights relating to the goods. He can sell those goods if he wants, he can destroy them, he can mortgage them, he can transfer those goods as per his or her wish. So this is again a big difference between hire purchase and installment sale system. The next point is point number 4, risk. Hire purchase system. All risks are borne by the vendor before payment of final installment because he is the owner. And in case of installment sale system, if we see, all risks are borne by the buyer because he has become the owner. Right of return. Hire purchase system. The buyer can return the goods before making the final installment, and here this kind of option is not available because he already has become owner after signing the agreement. Repair and maintenance. Who is taking the charge or the liability of repair and maintenance in case of hire purchase system? It's a seller, and in case of installment sale system, buyer is responsible. Forfeiture of installments paid. Hire purchase system, in case of default, whatever installments paid will be forfeited, and the act of forfeiture cannot be activated in case of installment sale system. This is again one of the major difference between two. A remedy to seller in case of default. What remedy is available? What option is available if the buyer defaults? Then seller can forfeit the money already paid and can take back the asset in case of hire purchase system. the seller can take legal action against buyer in case of installment sale system. He cannot take back the goods. He cannot forfeit the amount. Why? Because this is not hire purchase. This is installment sale system where the ownership is transferred immediately after signing the agreement. That's why the seller cannot take back the goods as he has not remained owner, but he can take a legal action against the buyer. So in this way, students, we have completed the difference between hire purchase and installment sale system as well. I hope this difference between hire purchase and lease and hire purchase and installment sale system is going to be very useful to you to write your answers in exam. Keep reading more and more and keep revising more and more. Then only you will be able to recall in your exam. Thank you.